Hi, so we'll be starting with lesson 10, your regulatory approvals of scheme. Now, what schemes are we talking about? We are talking about mainly mergers and amalgamation. So, whenever there's a M&A, you require a lot of regulators' approvals. Now, which regulators are there? That is SEBI, MCA, and RBI, etc. So, we'll see what are those approvals when you want to do a merger and amalgamation. First, they start off saying that under the Companies Act, it requires that the notice of merger be sent along with other documents to all the, not only to the shareholders but the creditors, but also to the regulators. Yes or no? Yes or no? So it's important to take, I'll tell you what is important from exam point of view also. Right now they're just building up saying that in a M&A, you not only need approval of your shareholders, you also require approval of your creditors, but you also require approval of your regulators. So merger and amalgamation involves various issues including regulatory approvals. The regulatory approvals are contained not only to sectorial regulators, that means if I am a telecom company, which is the sectorial regulator? अगर मैं एक फोन कंपनी हूं तो मेरा रेगुलेटर मेन कौन है? It will be the Telecom Regulatory Authority of India. Again, similarly, if I am an insurance company, which is my regulator? IRDA. Very good. Okay, Insurance Regulatory Authority of India. So when two company or an insurance company is merging, it will have to ask its regulator and take approval and NOC of the regulator and also other regulators. Now, who are those regulators? This chapter is about that, like income tax, SEBI, ROC, etc. So your regulatory approvals in the merger cover your CCI, Competition Commission of India. All we'll be seeing the income tax authorities, the SEBI, Stock Exchange, RBI, the ROC, liquidator, etc. So we'll be going through all of them one by one. First, they're talking about CCI. Now, if I have to ask you, who is the regulator for competition in India? For competition in India?
The Competition Commission of India.
The Competition Commission of India. What does it mean? That whenever there is someone is trying to kill the competition illegally, let's say there is a very big company and this company now tries to ensure that they are only there in the market, so they try starting to kill small companies. So for that to oversee this thing, if there is any kind of issue with respect to competition in the market, the matter will go before a authority called as CCI, Competition Commission of India. Now, when we have done the Competition Act 2002, specifically your section 5 and your section 6 talks about something called as combination. What do they talk something about? What do they talk about? Combinations. Now, what are combinations? Combinations are large mergers and amalgamations. They are what? Large M&As, takeovers, etc. So whenever there is a two massive mergers, don't you think that there is a chance that competition will be affected? So what does CCI say? Listen, whenever there are these big mergers, please come and take our approval. Please come and take our approval. Without our approval, you can't function. So an example of this, a real life example of this, when Vodafone and Idea merged, they were the two biggest companies in telecom industry. When they merged, it was a big merger. So they had to take approval of CCI before merging. So combination has in your Competition Act has two sections that we need to know, Section 5 and Section 6. Section 5 gives you the threshold. They give what? Threshold for combination. Threshold means what? What is a large merger? What is considered to be large? What should be the asset? What should be the turnover? Then we can say that this is a big merger. If it is a big merger, go and take approval of the regulator, that is CCI, because CCI says that such a big two players are merging, there is likelihood, there is a probability that competition can get affected in the market. So please come, take our approval. We will check the details and then approve it. Next, if there is companies, it is a combination, it is a large merger, but they say we don't want to follow. Then law says the Section 6 that if a combination is entered, if a large merger and amalgamation is entered without the consent or approval of the regulator CCI, that entire merger is considered to be void. This we have done, yes or no, in our executive also, and you have a separate chapter on this as well. Okay, now we will be seeing a little detail on that. Section 5. What did Section 5 talk about quickly? What did Section 5 talk about? Section 5 gave you the thresholds. Okay, the Competition Act is the principal main regulation that regulates large mergers amalgamation. Section 5 and Section 6 of the Competition Act deals with the provisions of combination. Section 5 prescribes, that gives the jurisdictional threshold limits, that what are the limits, that if these limits are crossed, it will be treated as a large merger. If it is a large M&A, it will have to take approval of CCI. Meaning of combination. So combination means large mergers. Threshold limits are given under Section 5 of the Competition Act. Now thresholds relate to how much assets turnover should be there. Okay, once what is the combined entity or taken over entity, after that what is the combined assets or combined turnover, we will see, and then we will decide whether it is a combination or no. If the threshold limits are there, okay, if the threshold limits are met, then it is mandatory to notify to the CCI. Clear? Yes or no till this? Again I'm repeating. Some of the companies like banking companies, insurance companies, your venture capital funds have been given exemption from this. They don't require approval. Clear till here?
Yes, sir.
So if exemptions are available, do I require approval of CCI? No. If I'm exempt from approval, then why will I take approval? So some companies are there, we will see which, but normally they all fall under normal cases and they have to take approval of CCI. What will CCI check? If I go to the CCI, that this is the scheme, that we are two big players in the market, we will merge. So CCI will say, wait, we want to see whether there is no monopoly in the market. Two big players are merging, Idea, Vodafone, you can do anything in the market. So we want to check, ensure, verify that the merger or combination is not going to cause an appreciable adverse effect on competition. Matlab, appreciable means negative, harmful, okay, a potential adverse effect on competition. Clear till here? So CCI will just check that competition ko to pareshan nahi karoge. Competition should not be affected illegally. Okay. Now threshold limits, triggering events. Now if any company, how will you merge? How will you take over a company? Can anyone tell me? What do I have to do? Take over means what? Acquisition of control. Yes or no? If I am saying company A is going to take over company B. So how will you take over? You will do what? you will acquire the shares, or you will acquire the voting rights, or you will acquire their assets, or you will acquire control. Yes or no? If all this is done and it is meeting the threshold limits given under section 5, then you must inform the Competition Commission of India. Concept perfectly clear? Yes or no? Now we'll be seeing the next one, that is your types of notifiable transactions. Now what kind of transaction should be notified? Obviously if it is hitting the threshold limits. So section 5 talks about 3 broad categories of combination. Mean this part is not very important, okay, but let's understand what they are trying to say. Combination means large mergers and amalgamation. Yes or no? Till here it is clear. Yes or no? They are your large M&A. Now 3 categories they are divided. Let's see. Acquisition by one or more persons of the control shares, voting rights, assets, as we saw, where the parties or the group to which the target will belong post acquisition meet the threshold limits. So normally what they are saying, acquisition of control by one or more persons. So let's say there is A and B, okay, trying to take over control of the assets of one or more enterprise. Okay, so 1 and 2 enterprise, where the parties to which the target will belong post acquisition. Means this is the target, yes or no? This is the target, yes or no? Trying to acquire this target. So this is pre-acquisition. Pre-acquisition both were separate. In post-acquisition they will all come under one control. Agreed? Post-acquisition they will all come under one control. All of them will come here. That's what they're saying, and the threshold limits have exceeded of this combined entity. So the acquisition by one or more persons, so there is acquisition of one or more persons, and they're saying that after the marriage they're all going to be one. The acquisition of one or more where the parties to which the target will belong. So target will say, now where I will go after purchasing, okay, will belong post acquisition meet the assets or turnover thresholds. Clear till here? That means the combined entity which we are saying post acquisition, the target will belong, let's say, in this new company. Here the threshold limits are exceeded. Clear till here? Let's call it C. This is the new entity. Let me give you another simpler example for you to explain. When we say that the threshold limits have exceeded, okay, now A is getting merged with B and it's going to form C. Yes or no?
Yes, sir.
Yes. Now threshold limits I will see of whom? A I will see, B I will see, or of C I will see, to know whether it is a combination or no. Quickly, just logically apply.
C.
Very good. It will be of C. That is what they are giving. That the target company, wherever all this is being transferred, okay, we will see whether this is meeting the combination thresholds or no. Understood? So if this has increased the limit, then we will say that it is a combination and you have to take approval of CCI. This is simple.
Yes, sir.
Yes. So now let's read it again. Now this all, is not important, all these three, but still we'll just read it for understanding purpose. Now see, and tell me whether you understood or no. Then we'll move ahead. What they've given? The acquisition by one, okay, or more persons where the parties to which the target will belong post acquisition meet the assets and turnover thresholds. Understood? So the target will belong to whoever, that is C, is meeting the threshold. So it is a combination. Understood?
Yes, sir.
Yes. Very good. Next one. The acquisition by a person where the person concerned already has a direct or indirect control over another enterprise with which it competes, where the parties to which the target will belong post acquisition meet the thresholds. Means again they are talking about C only, yes or no? Again we are always going to see the merged entity, the amalgamated company, the final company, the resultant company. जो बना है उसका threshold देखेंगे ना, इतनी बड़ी हो चुकी है. So let's give an example for this also. Here what additional point that they have added? Already has an indirect control with which it competes. मतलब, can you all tell me this kind of a merger is between competing entities or different sector companies? Quickly. Same sector company. So let's understand what is this. Okay. Now let's say this is Tata Steel. This is Tata Steel. It is merging, okay, with another steel company. Let's say, can you all name any other steel company? Steel Authority India Limited. Okay, it is merging with this. Tata Steel already had 20% stake here in this company. So they both are competitors, yes or no?
Yes, sir.
So they are competitors. And 20% stake held with Tata Steel. Now Tata says that I already have some steel, because see, this is how it always happens. We already have some stake, slowly we keep increasing, and at one day we say we want to buy out the company. If you want to buy out, you cannot just go ahead and buy out the entire company. You keep buying slowly, and then one day you say, I'll buy out the entire company, and you will buy this entire company. Maybe this can be a new name company, or it will continue in the name of Tata Steel only. So this is also covered. Understood? And now tell me which threshold which we will see, of A, B or C?
For C, sir.
For C, because the to which it will belong post is meeting the thresholds. Understood till here? Yes. Okay. To which the target will belong post acquisition is meeting the specified threshold limits. Now the next category, merger and amalgamation, where the enterprise which is created, a new enterprise is created, to which the enterprise will belong after the amalgamation meets the specified threshold limits. So in this case, let's say it was resultant company was Tata Steel only. So sale gets dissolved and all the assets gets transferred to Tata Steel. So it is the scenario, the second case scenario. Now the third case scenario, what they are saying, a new company is formed. Let's say there is company A, it is merging with company B. Company A gets dissolved, wind up. Company B also gets wind up. Where did the assets go? To which company?
Company C.
Company C, or I'll call it as company AB. This is a new company. Thresholds. So this is, can I say this is a M&A, a type of a M&A, where both the companies transfer their assets to a new company. So we can have Hero, we can have Honda, both of them merge and they form a new company called as Hero Honda. Concept clear?
Yes, sir, clear.
If this also is meeting the threshold limits of combination, it will be treated as a combination and you have to take approval of CCI. So this they have given. Now again and again I am saying threshold limit. What is the threshold limit? You remember in executive we have done.
Yes, sir.
Okay.
We
So
can recall it.
very good. So threshold limit is something like this. I've just added it up. Assets and turnover. First, if it is no group, that means A is merging with B. In group, Tata Group is with joining or merging with Vedanta Group. So in group there are more companies involved. Clear till here? If it is a plain vanilla transaction, A and B, company A merging with company B, it is a no group. So then we will see of the combined entity, the assets. If the assets are 2000 crores, it is a or more combination. Or if the turnover is 6000 crores or more. Clear till here?
Yes, sir.
2000 into 3. Remember this, into 3 you will get 6. I am trying to memorize the threshold limits. And when we are going down, we should multiply by
4.
4. Very good. So here it will be 8000. If it is a group, then we will give more limit to it, that is 4000. 8000. If the limit is 8000 crores or more the assets, then it is a combination. If we see the groups turnover, then it will be 24,000 crores or more, it is a combination. Now this we were talking of domestic transaction. We were talking of what kind of transaction? Domestic. That means both are Indian company. But it is possible that we have a cross border merger where a foreign company is involved. Tata merging or Tata taking over Jaguar and Land Rover. Okay. So this is coming as a cross border. So when it is in India and outside India. Okay. So this we are talking of a where there is a foreign company involved. So then the assets and turnover we will see. So again, they have given you in in dollars form. If it is no group, then $1 million assets are there. And again same multiplication will be into 3. Or if the turnover is $3 billion. Again down we will have into 4. That if the asset, if it's a group, okay, then there is a foreign group involved. Then the assets collectively are more than $4 billion. Then it is a combination. Or if the turnover collectively is more than $12 billion. Concept clear?
Yes, sir.
Yeah. But one more important point they've added here, and very intelligently they've added, and logic is also there. If imagine we are taking over a foreign company like Vodafone. Okay, we are taking a Indian company is taking over, buying out a foreign company like Vodafone. Vodafone might say that, listen, I don't have that many assets here. Though I am a foreign company, you are taking my assets. My assets are all over the world. In India, hardly anything is there. Everything is there in USA, Mauritius and other countries. Then it is right to say that no, should we take the combined, the turnover or the assets of the company, even if the assets are outside India? What do you think? Means we were taking the combined asset and turnover. So the foreign company will say that, hello, hardly anything has come in India. Everything is outside India, then why I will come and take approval of CCI in India? Yes or no?
Yes.
So what government said, okay, fine. Your minimum, if in India you have minimum assets of 1000 crores, then it will apply. Or even if it is a group 1000 crores or more, and if it is outside, a turnover is of 3000 crores. Means if we see that there is a foreign company involved and in India its assets are only of 10 crores, will the combination provision apply? Will it be treated as a large merger? The company might be there, but the Indian company might be there, but foreign company, hardly 10 crores assets are there in India. Will the combination provisions apply?
Yes, sir. Okay.
No, because the minimum component of the foreign company assets in India should be 1000 crores. Understood? Yes or no?
Yes, sir. Understood.
You any doubt?
No, sir. No. Nothing.
Not sir.
Okay, great. Now moving ahead. So combination you require approval of CCI. Now what happens? You give me this. I want to ask you, okay, whether this makes sense. What was the threshold limit for assets when there were no groups?
No, 2,000 crores.
2000 crores when there was no group. Now we're taking that only for the example. And turnover was
6,000.
6000 into 3. Very good. Now what happens? This scenario you catch. If there is company A, it is merging with company B and collectively company C, its assets are 2500 crores. Will combination provision be applicable?
Yes, sir. Applicable.
Applicable, very simple. But now you tell me. Same example. Company A is a big company like Reliance Industries. It is like Reliance Industries. Reliance Industries assets itself is 2500 crores. Understood? Reliance Industries assets itself is 2500 crores. And the company with they are merging, it has assets of 3 crores. Can I say it is a big merger? Though I am adding, मैं दोनों को ऐड करके 2500 तो जा रहा है ऊपर. After adding, both of them are going about 2500. Yes or no? But does it look like a big merger?
No.
No. Because what Reliance type of companies used to say that, listen, yaar, any small company also I'm picking up, you're putting me under combination. What nonsense. So then they started saying that, listen, if the target company is very small, then we should exempt such transaction from the provisions of combination. Understood?
Yes, sir.
If the target company, if the thresholds of the target company, target enterprise assets are less than or equal to 350 crores, less than 350 or equal to 350 crores, that is considered small, or turnover of less than or equal to 1000 crores turnover, then we will treat it as a small merger and we will exempt it from the transactions. Clear? So pursuant to the notification dated this, acquisition where the enterprise whose controls are being acquired is not more than 350 crores or turnover is not more than 1000 crores are exempt from the provisions of section 5. So when I say 3 crores, then what is the limit they've said is 350 crores. If it is not exceeding 350 crores of the target, provisions of combination will not apply. Concept perfectly clear?
Yes, sir. Clear.
The purpose of this exemption, and that is why they call it de minimis, minimal small amount is there, okay, for acquisition. So minimum I'm acquiring and this is so small. So then they are saying that, listen, it is only the acquirer only whose limits are so big. Target is not there only. So two companies, nothing big merger. It's a small merger and provision will not apply. Now, if it is a merger, do I have to take approval of CCI? Yes or no?
Yes, sir.
Yeah. So I have to go and take approval of CCI. Now, within how much time? The time limit is they asking. What is the time limit to go and take approval of CCI?
210 days.
No, wrong. I'll tell you what it is. Good, you gave the wrong answer because the clarity of concept will be there now. 210 days is for the CCI to give approval. I'm saying
Sorry, sir. 30 days. 30 days.
30 days. So what is my question? My question is, two companies are merging. They have to inform CCI within how much time? That, listen, I'm getting merged. So the answer is 30 days. So section 2 says that any enterprises who propose to enter into a combination shall give a notice in form 2. In which form? Form 2, giving the details of the merger, the threshold limits, etc. Okay, and it should be given within 30 days from the time when the board of directors have approved the transaction or you've entered into some agreement for the transaction. Then later government said that 30 days is very less. What is the time limit that we had decided in the act? 30 days time to give notice. Then the government said that listen, let's give them an exemption from filing within 30 days. Government said okay fine, 30 days time limit not applicable. So I became very happy. But then they say listen, you can't even merge. Combination cannot be enforced, cannot be entered, cannot be completed till you have given us the notice and we have given you approval. So is it necessary now today to give notice within 30 days of signing?
No, sir.
Answer is no. Section, they say you take your own sweet time, जितना मर्जी चाहिए time ले लो, but merger होने भी नहीं देंगे. We won't even let you implement the merger. Okay, so that the notice related to a proposed combination needs 30 days to be filed. However, as per the notification, now this is important. However, as per notification number 2039 dated on June 2019, the Commission has relaxed the 30 days norm. The notification has done away with the deadline, okay, and given the parties the flexibility to file the combination when they are ready to file. Hence, the parties are free to file the notice at a time convenient to them, but they have to ensure that the combination is not acted upon unless the same is approved by CCI. Understood? So can they act as a combined entity now? Combination shall not be acted unless approved. If I say, Arey, take it lightly, take a light chill pill. Let's enter and into a combination and let's do business. So then there will be a penalty. There will be a what? Contravention of this provision shall be penalty under section 43A of the Competition Act 2002. Is the section of penalty important?
Yes, sir.
Answer is normally it is not important. This is very important because the penalty amount is shocking. And that is why when we started the chapter, for approval they are first putting CCI only. They could have put anything else, but they are first putting CCI for a logic because of section 43. What is there in how much penalty is there? Are we seeing big mergers are there? The turnovers are more, assets are more. They are saying 1% of the total turnover or assets, whichever is higher is the penalty amount. Penalty amount is how much? 1% of the turnover or assets, whichever is higher. Isn't it very scary punishment? 2,000 crores assets, 6,000 crores, compute 1% of that. So it's a huge penalties will run in crores. Okay. Now as you all said, once I have completed my work, I have given approval CCI. Then I am waiting when will CCI approve. Within how much time they should approve?
Now it's like 210.
Within 210 days from I give the notice, they have to approve. But 210 days means should CCI wait till 210 days or they can give approval before also?
Before also they can give approval.
If they give approval beforehand, I can start with the combination. So I have to wait for 210 days till they give approval, or if the approval is given before, if the order is passed before, I can start the business. So whichever is earlier. So either I wait for 210 days or order is passed, whichever is earlier. Okay, that means order has to come within how much time?
Within
210 days. Otherwise, I will believe that it is a deemed approval. Okay, 210 दिन में नहीं आया मतलब approval deemed है. I can continue with the combination. If 210 days if not given the approval, I'll continue. Now the combination should CCI really, take 210 days, or they should endeavor try to pass a judgment earlier so that the business can be started early?
They should prove with like before 210 days.
Very
Earlier
good. So the law says that the CCI shall endeavor to pass an order within a period of 180 days. That means endeavor means try to pass the order within, though you got 210 days, but pass the order within 180 days. If, now this was section 5, now we are talking about section 6. Section 6 says that if any person has entered into a combination without approval of CCI and they didn't even get any exemption, still they did not take approval. So will the transaction be valid or invalid or void? It will be void. Very good. So same thing, they are saying that the notice of 30 days, they repeated it, should be given within how many days? 30 days, but now the time has been relaxed. In which form number? Form 2. And within 30 days it was said of the proposal, when the board of directors have approved, or if they've entered into any agreement within 30 days, they are given time. But now that has been relaxed. Okay. All companies have to take approval, or some have been exempt?
some have been exempted.
So the exempt companies are given here. Who are the exempt lucky companies who don't have to follow this? So if you see, these are all financial companies which are helpful for the country. So they are saying, listen here, you go ahead, no problem, don't take approval, you all are all banking companies. They are merging, let it go. So the provisions of this section shall not apply if the share subscription, okay, if someone is by taking shares, acquisition of shares, control, voting rights, is by a PFI, public financial institution, or of a FII, foreign institutional investors. We say, come, India doesn't have much rules, regulation, you come, buy companies, no approval needed. Bank, venture capital funds, etc. Pursuant to any covenant of a loan agreement or investment agreement. One is, there must be an investment agreement. Oh, do you all know what is the, so we draft that, okay, so I can tell you. What is the investment agreement? What do they call it in practical life? What is the full form of this? SPA.
Share purchase agreement.
Very good. Share purchase agreement. So that means there must be the target and there must be the acquirer. So the acquirer and them will have into an agreement, right? They are calling it as an investment agreement, more correctly termed as share. They will purchase the shares now. Share purchase agreement. So pursuant to a share purchase agreement. Or sometimes if there is a loan and you could not repay the loan, and pursuant to the loan you are converting into giving the shares. If imagine I have my company and I have taken loan from you, I can't repay the loan, so I say, listen, I'll give you shares in the company. So pursuant to a loan agreement or pursuant to a investment agreement, if the acquisition is there for these type of people, section this does not apply. However, these companies who are mentioned, all this is given in section 6 subsection 4. The name of these companies are given under section 6 subsection 4. So all those who are mentioned under 6 subsection 4, do they require approval?
No.
No. But details तो देना पड़ेगा कि नहीं? But would we have to give details to CCI? Approval नहीं ले रहे, पूछने नहीं जा रहे, बताना तो चाहिए कि नहीं?
Yes, sir.
Yes. So they are saying that the CCI को details दो. Okay. So the PFI, whoever here referred under section 6 subsection 4, shall within 7 days of the acquisition file inform this with the commission the details of the acquisition. Only details. Approval nahi, information. Now coming to the next thing. Combination, when we are doing, it is given under which sections of Competition Act?
Section 5 and 5.
Section 5 and section 6. You know that there is a detailed regulations for governing combination. They are called as, in short, this is a very big line, okay? In short, what do they call them in practical life? Combination regulations. What do they call it? Combination Regulations 2011. What is the full form of that? The CCI, Competition Commission of India, Procedure in regard to transaction of business relating to combination regulation 2011. Which is a more simpler word to say?
Combination regulation 2011.
Combination Regulations 2011. Now we will be seeing into the regulations, few parts. Regulation 5, Regulation 9, Schedule 1, Schedule 2 and certain form numbers. Clear? So now we are doing Combination Regulations 2011. Very simple, nothing great in it. Okay, very easy to understand. First, simple, they'll just repeat that where assets are being transferred to an enterprise. That happens or no? In combination, you're transferring the assets are being transferred to an enterprise. So if I am the target, I start giving my assets देना चालू करता हूँ to acquirer. Yes or no?
Yes, sir.
अभी एक साथ देते या कभी कभार सीरीज में देते, एक बार दिया, दूसरी बार दिया, वापस दिया. So either I start giving step by step. Okay. Then for the purpose of section 5, the value of the assets and the turnover of the enterprise whose assets are being transferred shall also be attributed to the value and this to which the assets are being transferred. Very simple understanding, little difficult. The sentence is drafted a little difficult. Have you understood directly? Have you understood just by when I read?
No, sir.
No. Okay, so let me explain. That's what I'm saying. Concept is so simple after I explain. So first is they are saying company A and company B. Company B is the target and they are being transferred to, let's say, company A only. Company A will then be the bigger company, okay, which has everything. So can I say that the assets of the company A will also be counted in calculating section 5 thresholds?
Yes, sir. Yes, sir.
Will company B assets and turnover also be counted here?
Yes, this also should be counted.
Obviously we are seeing the combined entity na, so even the targets assets, whether given in series or whatever, and even the turnover of that should be done for the purpose of computation of section 5. समझ में आया?
Yes, sir.
मतलब combined entity का ही calculation करना है, बस वही बता रहे वो लोग. So they are saying that we have to find out the combined entities limit. For that limit, targets company's asset and turnover will also be included. Understood? Yes or no?
Yes, sir. Understood.
Now when I am reading, you tell whether you understood or no. Where the assets are being transferred to an enterprise. For the purpose of section 5, the value of the assets and the turnover of the assets who's being transferred, that is the target company, shall also be attributed, included in the turnover of the company to which the assets are being transferred. Means the target company's assets and turnover shall be attributed to the combined entities assets and turnover to whom this is being transferred. Understood?
Yes, sir. Understood.
Yes, sir.
I'll just read it one last time. Let's see you understand. Where the assets are being transferred to an enterprise, to this combined entity, for the purpose of section 5, the value of the assets and turnover of the enterprise whose assets are being transferred, that is of the targets, shall be attributed to whom? To the combined entity, to the assets attributed to the value and the assets and turnover of the enterprise to which the assets are being transferred. Understood?
Yes, sir.
So very simple, very simple. Moving ahead. Regulation number 9. It talks about Form 1 and Form 2. Okay, it talks about Form 1 and Form 2. Form 2 I had explained. Anyone knows what it is relating to?
Notice of the combination.
Notice of the combination, detailed of the combinations, etc. That form is given in which schedule?
Schedule 1.
Schedule 2. Clear? All forms for combinations are given under one schedule only. What is that schedule?
Schedule 2.
So Form 1 is in which schedule?
Schedule 2.
Form 2?
Schedule 2.
Form 3, Form 4 जो भी फॉर्म्स है सब शेड्यूल 2 में मेंशन्ड है. ठीक है यहां तक?
Yes, sir.
Covers the forms under combination. Now, in case of a merger or amalgamation, parties to a combination shall jointly file the form 1 and 2. Means we'll see what is the other form for. But both the companies will file jointly. Yes or no? मतलब कॉमन सेंस से जॉइंट एंटिटी बोलेंगे ना कि भाई हमारा ये ऐसा है. Now, they will file jointly. And it has to be signed by the person duly authorized by the company. फाइल करेंगे तो साइन दोनों का आएगा, दोनों कंपनी का आएगा कि नहीं? अगर फॉर्म एक फाइल कर रहे हैं बट साइन शुड बी देयर बाय ड्यूली ऑथराइज्ड बाय द कंपनी. यस और नो? फॉर्म 1 and 2 may also be signed by any person duly authorized by the company. Means fill the form and get the signatures authorization properly. Now, Schedule 1 gives you list of few transactions to which the combinations are covered. Clear till here? Schedule 1 will give you covers certain types of transactions, and when you're reading the act or you're reading this, they refer to Schedule 1 transactions. Now here they have just picked up one transaction and they have given you. Right now it is not important. Understood? Schedule 1 gives you list of certain transactions. Normally when you're reading the Competition Act, they will say that Schedule 1 transactions and then they give you certain rules for it. Clear? From that many transactions, they have just picked up one transaction and they put it up here, which has no sense here. Understood?
Yes, sir.
Yeah. Schedule 2 gives you the copies. Now, Schedule 2 covers the forms. So, furnish copies of approval of proposal relating to M&A along with the supporting documents listed in the notes to Form 1. Okay. So, furnish copies of approval of the proposal. तो जो approve हो गया has to be given in which form? Form 1. That the proposal for approval of M&A. Is this the approval of combination or it is approval of the M&A?
Approval of
M&A. मतलब क्या? देखो board resolution होगा. There must be a board resolution. There must be a special resolution. There must be a creditors meeting. All those details will come under Form 1. Once you give Form 1, the CCI will give you a specific registration number. Understood? See. What is Form 1 about? Form 1. Registration number to be assigned by CCI. Information to be supplied by the notifying parties. तो जो भी parties inform कर रहे हैं उनको एक registration number मिलेगा. Form 2 किसके लिए है? For filing notice with the Competition Commission of India under Section 6 subsection 2. Okay, this is for section 6 subsection 2 specifically with respect to combination. And form 3 is form for filling the details of acquisition under section 6 subsection 5. This is for those exempt companies. Yes or no? Exempt section 6 subsection 4 and 5 is for that exempt company. So they have to file in form 3. For a combination का form 2 में जाएगा and details of the M&A will be in form 1. Understood?
Yes, sir. Understood.
So
Yes.
they won't ask you, but you can quote in the exam. Now we are done with Competition Commission of India. Now we are doing approval under Income Tax Act. So can we start with Income Tax Act?
Yes, sir.
Okay. Now before starting, can anyone tell me under which section is this going to be hit? What all sections are going to be hit? Anyone knows? What is the section? Section 2 subsection 1b. It gives you the definition of amalgamation. It gives you the definition of amalgamation. Is merger defined anywhere? Merger has not been defined. Amalgamation has been defined under the Income Tax Act under section 2(1)(b). Concept clear?
Yes.
Yeah. Second, they talk about capital gains. They talk about what? Capital gains, capital assets. Which section of Income Tax Act deals with that? Anyone knows? Section 2 subsection 47 defines the term transfer. Section 45 explains what is tax, capital gains tax. Okay, so two things we'll be doing. Section 2 subsection 7 and section 45. Clear till here? Clear till here? Section 2 subsection 47. Clear till here?
Yes, sir.
First we write down the section and it's a cakewalk, okay? So this is about definition of transfer and this is about capital gains. So these three topics will be done. So first they start off saying that there are different kinds of M&As. That's your M&A, demergers, slump sale. That's your assets are sold for a lump sum amount without giving individual value to the assets. Spin-off, asset sale, transfer of shares, etc. All these are covered. Then they say merger is not defined, amalgamation is defined. So then they go on to the amalgamation definition. What do you mean by the term amalgamation? Now, first let me explain. Amalgamation, first you tell me, amalgamation is a wider term or merger?
Amalgamation is a wider term.
Very good. So amalgamation could be of two kinds. Okay, amalgamation in the nature of merger. So merger is covered here. So amalgamation is a wider term. It includes merger. Clear till here?
Yes, sir.
And in the nature of purchase of assets. Purchase of asset. That is, asset purchase has been done. So in the nature of merger, what is happening? Now very simple. Merge means what? The people who are running the business in this, in A, in B, and now both of them, majority would be the same shareholders running the new business just under a new name. Concept clear?
Yes, sir.
In merger, the assets get transferred, the liabilities get transferred to the new one, even the people get transferred, mean the shareholders are also essentially the same only. Clear?
Yes, sir.
So what happens? Hero, Honda, both of them want to now operate under Hero Honda brand. in nature of purchase is somewhere like a acquisition, takeover. So here in merger, what can happen? A plus B is equal to AB, where A gets dissolved, B gets dissolved. What is important in amalgamation? There is a dissolution winding up, means two companies will cease to exist. Concept clear?
Yes, sir.
In purchase is more like an acquisition of assets. That's why they call it purchase method is also applied. So let me explain. A plus B. In this case, let's say A gets dissolved. A gets dissolved and its assets are transferred to B. And the new company, surviving company, will be B only. So can I say that the assets have been transferred to B and A is then? So this is also an amalgamation. This is an amalgamation in the nature of merger. This is an amalgamation in the nature of purchase, sometimes called as absorption, sometimes called as absorption. B, A got absorbed in B, yes or no?
Yes, sir.
Yes.
Yes, sir.
So in the definition of section 2(1)(b), they explain that if all these criteria is fulfilled, then it will be in the nature of merger. Otherwise, it will be in the nature of purchase. Clear till here?
Yes, sir.
Yeah. So let's read and understand whether it is making sense or not. Okay. Amalgamation, section 2(1)(b). The merger of two or more companies with another, or two or more companies to form one company. Okay. In such a manner that, okay, such a manner that, so amalgamation means the merger of companies in such a manner. So now we are talking about amalgamation in the form of merger, that all the properties of the joining amalgamating companies become that of the amalgamated company. Amalgamating company becomes that of the amalgamated company. All the liabilities of the joining companies of the amalgamating company become that of the amalgamated company. Okay. Shareholders will be different or it will be the same. Both of them will now run the same business.
Same.
Shareholders holding not less than 3/4 in value of the shares in the joining company, mean the shareholders who are there in the joining company will become shareholders of the amalgamated company. Concept clear?
Yes, sir.
If this is not followed, that it is not a merger, then otherwise it will be treated as a acquisition of property of one company by another. Concept perfectly clear?
Yes, sir.
So this will be in the nature of purchase. This is in the nature of merger. Now capital gains. Now will capital gains tax be levied? Yes or no?
No, sir.
No, sir.
Merger thing.
Means what? Let's understand. There is company A, there is company B, and there is company C. A's assets are transferred to B. B's assets are transferred to B. To C. Yes or no?
Yes, sir.
Now, company C is getting assets. Let's say these assets were bought. Cost of acquisition was 100. Now when they are transferred in the nature of merger, they are transferred at book value. They are transferred at balance sheet value. So 100 will be valued at 100 only here. Understood? And they are the same shareholders. Can you, if from one pocket it is gone in another pocket, does that mean that you've got a capital gain? Is there capital gain?
No.
कैसे होगा? मैं खुद का ही एसेट खुद को ही दे रहा हूं. मेरे एसेट्स थे, मेरे पास आ गए. इसके एसेट्स थे, मेरे पास, इसके पास आ गए. Proportionately the stake will be same. Assets have been given mine to that, and that is only there with me. That other person's assets are with them only. Only they will have the proportional share. So there is no capital gains tax that will be levied. Clear till here? Perfectly clear? Yes or no?
Yes, sir.
Gain होगा जब मैं बाहर वाले को बेचूंगा ना. Gain, I will get a gain when I sell to another person. Here I am just doing reconstruction, rearrangement, okay, realignment of the company to function better. So capital gains, yes.
Sorry. So what if these assets are transferred at a fair value?
Correct. Now, if these are transferred at a fair value, then it will not be covered under merger, right? Because merger, by definition, it is saying it should be transferred at book value.
Okay.
Okay.
So, like I do have a controversy. Like for Indian Accounting Standard 103, the assets are
That's business
transferred.
transfer. Yes.
Okay, that accounts a business combination.
Yes. So if it is a sale of asset to a third party, then it will be covered under a capital gains tax.
So like slum sale.
Correct.
That would be fine. Okay.
Yes.
Got it.
In slum sale is different. Okay. Slum sale, what is happening? There is a sale at a lump sum amount to a party. So the difference will be the cost of acquisition and the slum sale consideration. On that difference amount, there will be capital gains tax. Means
Wonderful.
in capital gains, in slum sale, what I'm selling off to another person. So let's say the consideration will be there less the cost of acquisition. Okay. So whatever it is there, that will be the capital gain, and on that tax is levied.
Okay.
Okay. So they do the indexing, etc., and then the will be computed. Here what is happening is merger, no capital gains taxes levied since it's the same shareholders owning the same assets.
And it doesn't cover it doesn't cover the transfer definition, no?
Yes.
Like the Companies Act.
Very good. So as per, not under Companies Act, under the Income Tax Act only.
Income Tax Act.
Yes. So in the Income Tax Act, they've given you section 2 for capital gains tax to be levied. There has to be a transfer of capital assets. Here they are saying that it will not be treated as a transfer for the purpose of capital gains. Understood?
Yes, sir.
Okay. So section 45 says tax on capital gains is when there is a transfer of capital assets. For the purpose of mergers, the transfer is not to be considered under the definition of transfer for capital gains. Okay. Now in a merger, now only one thing is there. If it is resulting to a non-resident, if we are selling it off to a non-resident, if a merger or a reconstruction in a transfer of capital assets by a resident to a non-resident, if we are transferring the shares of capital assets by a resident to a non-resident, would be a taxable event. I am selling off to, whenever I told you there is a sale to a third party, then it will be treated as a taxable event. Foreign entities would be taxed on the transfer of assets in an inbound merger under section 45 of the Act. Such a transfer of assets will be taxed in India to the extent the assets are located in India. Understood or bouncer? Then I will explain. What is given? The foreign entity would be taxed if there is a transfer of assets in an inbound merger. Now what is an inbound merger? Inbound merger is a merger in which the foreign entity merges with an Indian entity and the foreign entity ceases to exist.
The
So-
resulted company is an Indian company.
And the resultant company is a inbound means Indian. Outbound means outside company ban jate ho. The resultant company. So here what is happening is the foreigners, if they are knocking off to the Indians and leaving, so then on that will be considered to be a transfer and a taxable event. Clear till here?
Yes, sir.
So let's take an example. If I'm a foreigner, I'm holding shares. Now I sell it off, transfer it, means sale, to an Indian, and I leave. So then obviously what price I bought the share and at what exit price is there, difference amount, capital gains will be computed. Understood?
Yes, sir. Understood.
Now section 47 of the Act sets out certain transfers that are exempt from the provision of section 45, and such transfers are exempt from tax on capital gains. The relevant exemptions are covered later on also. Clear? So this is it for capital gains, that on transfer there is no capital gains tax levied. That is the main part. Now coming to, we finish from CCI, then we finish from income tax. Now we are doing approvals from stock exchange and SEBI. Very, very important. A listed company has to follow which regulations? A listed company has to follow the listing agreement. What is that regulation called?
LOD, that's
Perfect. It is your SEBI listing obligation and disclosure requirement regulation 2015. Normally it is called as listing agreement. Listing agreement is an agreement between SEBI, that is between stock exchange, and the listed company, that the listed company has certain obligations and disclosure requirements. Clear till here?
Yes, sir.
Yeah. Now we'll go here. What regulation numbers are there that we have to know? First is regulation number 11, scheme of arrangement. Now what is the scheme of arrangement? Is nothing but the scheme for M&A. When both the parties have made and penned down the scheme, how much, what is the share transfer ratio, when the assets will be transferred, what are the details of the scheme, who is the valuer, what the new company will be called. Means the entire M&A document is a scheme of arrangement. You have to ensure that you comply with the listing agreement. The listed company shall ensure that any scheme does not in any way violate, override or limit any of the provisions of the SEBI laws. Concept clear?
Yes, sir.
Regulation 11 is saying violate मत करो यार, कोई law को break मत करना, ठीक है? Don't break any law is what regulation 11 is saying. Next, regulation number 37. Regulation 37. Now, I want to ask a question and see your understanding of law. I require approval of stock exchange, yes or no? If I am merging, or no?
yes.
If it's a listed company and I'm merging, do I have to take approval? Yes or no? You can answer whatever you feel.
So we
Yes,
have to
sir.
get notice, no? We don't need to take approval.
You don't need approval. Okay. Let's see. Company A is there, company B is there, and then it is going to become a new company called as company C. Company A was all of them are listed. All of them are proposed to be listed. That is why stock exchange LODR is coming. Company A was also listed, company B is also listed, company C is going to get listed. Now company A is going to get dissolved. Stock exchange से हट जाएगा because dissolve हो जाएगी. तो बताऊंगा कि नहीं? Company B dissolve हो जाएगी. company B will also be dissolved. So I'll have to inform stock exchange or no?
Yes, sir.
So, and the new company is going to be listed. So I will have to tell them no कि भाई हम लोग दो जा रहे हैं, नया कोई आएगा तुम्हारे घर में. अब मुझे बताओ, इन्फॉर्म करना है कि अप्रूवल लेना है?
अप्रूवल लेना पड़ेगा सर.
अप्रूवल लेना पड़ेगा. लॉजिक बहुत ही सिंपल है. इन्फॉर्म करूंगा क्या मैं तुम्हारे घर पे खाना खाने आ रहा हूं, कि पूछना पड़ेगा क्या आ जाऊं मैं? So same way, very simple, that the listed companies will have to take NOC. Do you want relatives to come like this at your house without informing you?
No, sir.
Exact on 21st December they will come during your exam time with their bags to stay for 7 days. Will you give NOC?
Obviously no, sir.
Obviously not. Okay. So same way, you have to take NOC from the listed company that listen, is there any amount pending? Is the listing fees pending? Is any violation going on? So NOC has to be taken. Now, my question is, the stock exchange approval has to be taken, NOC has to be taken. But now the question is, another counter question to you all. NCLT approval also to be taken?
Yes, sir.
पहले किसका लूंगा? कि मेरे हिसाब से हेड्स आया तो NCLT, टेल्स आया तो स्टॉक एक्सचेंज. Whose approval will I take first?
NCLT.
Wrong.
Stock exchange.
Stock exchange. Okay, so first approval NOC will be taken from stock exchange. This stock exchange NOC I will give in NCLT. Then NCLT will do. Otherwise, NCLT के पास में जाऊंगा, then NCLT, अगर if you are saying NCLT approval first has to be taken, then NCLT will say go and ask stock exchange. So it will become a loop, and nowadays that new thing is coming, stock, that real, whatever. So first, which approval is needed?
Stock exchange approval.
Stock exchange approval is needed. NOC is needed. Okay. So the listed company desirous of getting listed and they have made the scheme, everything, and they want to propose it before the NCLT, they have to go to the stock exchange for obtaining observation or no objection letter before filing with any court. Okay. Now still, as you all said, ki first go to court. Okay. So here they've clearly told that the listed company shall not file any scheme with the tribunal unless they obtain a NOC from the stock exchange. Concept clear? Once the listed company will get the NOC, then what they will do? They will place the NOC before the tribunal. Simple. They will ensure that they comply with all the rules and regulations. Then once I have gone to the stock exchange, then I will go to court. Now I am standing in court and saying please approve it. So then upon the sanction by the court, the listed company shall submit the documents to the stock exchange. Then I will go to the stock exchange. And listen, now I went to stock exchange. Then I had gone to NCLT. Now I am back to stock exchange telling that NCLT ने approval दे दिया. Okay. Now, nothing contained in this regulation shall apply to the draft scheme which is solely provide for a merger of a wholly owned subsidiary with a holding company, provided the draft scheme has been filed with the stock exchange for the purpose of disclosure. Okay. Now, nothing in this regulation, that is taking approval, going here, there of both the companies, shall apply to the draft scheme solely for providing the M&A of a holding company wants to merge with a wholly owned subsidiary. Do you think for them we will give the same amount of compliance or we will give them relaxation?
Relaxation.
So they have said that they are one and the same, wholly owned यार. अगर इसने रेजोल्यूशन पास कर दिया तो कॉमन सेंस से इधर भी रेजोल्यूशन पास हो ही गया होगा कि नहीं?
Yes, sir.
क्योंकि मैं ही बैठा हूं ना यार, मैं इधर कर रहा हूँ और मैं होल्ली ओन 100% शेयर्स आई एम ओनली होल्डिंग ऑफ दिस कंपनी एंड आई वांट टू मर्ज. दे से too many compliances not required. You don't require. Just go and intimate the stock exchange for the purpose of disclosure. Again, requirements shall not apply to restructuring proposal approved by IBC Code 2016. Okay. Now, let's say if there is a sick company and you've gone to the insolvency bankruptcy code, you've passed the order for merging, etc. Do you have to go to NCLT with the draft scheme and everything? Huh? What do you think? You can tell me. Whatever you feel.
तो जाना पड़ेगा.
जाना चाहिए. अभी उसके लिए तुम्हें पहले IBC कोड आना चाहिए, क्योंकि IBC कोड तो NCLT के थ्रू ही होता है ना.
Yes, sir.
Yes, sir.
IBC is done through NCLT is only the regulator for companies. So then again I will go. So the judge has passed an order for resolution for merging as a part of the resolution plan. Then I will again go out and again come in. So that is not required. Understood? Because it is one and the same. It's the same regulator. Understood? So again, nothing in this regulation shall apply if it is being done through IBC, because it's NCLT only governing all this. Clear?
Yes, sir.
Now coming to regulation number 94. Regulation 94 is a draft letter of this to be prescribed. A draft scheme of M&A. The stock exchange upon receipt of the draft scheme shall forward it to the board. Which board? Board of Directors or SEBI?
SEBI.
स्टॉक एक्सचेंज के पास में जाऊंगा तो स्टॉक एक्सचेंज तो सेबी के पास जाएगा ना.
Yes, sir. SEBI के पास.
लॉजिक देखो, अंडरस्टैंड द लॉजिक. LODR रेगुलेशंस के आगे कौन है? व्हाट इज द फुल फॉर्म?
SEBI.
SEBI LODR. So when stock exchange is there, but the back end regulator is SEBI only. SEBI LODR na. So once you've gone to the stock exchange, then they will inform to the board. The board will see if they find any kind of objection or comments they will give. You have to rectify the comments and then it will be sanctioned. So the stock exchange shall submit it for its objection letter. The stock exchange shall issue objection or no objection letter to the listed entity within the 7 days of receipt of comments from the board. So SEBI will tell me the stock exchange will tell the company. The stock exchange shall bring the to the notice of the court and tribunal also before at the time of approval of the scheme. Clear till here?
So,
simple points, nothing complicated. Now coming to approval from RBI, regional director, ROC and official liquidator. Let's see. When they are talking about RBI, they must be talking of which kind of companies?
banking company.
Banking company. Very, very good. Okay. Now, this is there. Section 44A of which act?
Banking Act 1949. Sir.
Very good. So section 44 of Banking Regulation Act, this is, you should mandatory know. They ask in the exam sometimes. So section 44A. Okay. Section 44A talks about merger and amalgamation of banking company. For banking company, which regulator you have to take permission?
RBI.
RBI. Now the procedure is extremely simple. Understand this, okay? It's not very different from the normal procedure. It's not very different from the normal procedure, with little twists and turns where it talks about mostly RBI. First, now I want to see your knowledge. For a regular merger mentioned under 232 of the Companies Act, that's a normal merger procedure, NCLT route. How much % percent consent is required of the shareholders of the company?
Majority in number plus 3/4 consent, sir.
3/4 something. 3/4? What? You are right in majority in number. Very good. So
3/4 in value, sir.
3/4 in value. Very good. So shareholders approval. How there is ordinary resolution, there is special resolution, there is something called as extraordinary resolution. Extraordinary resolution. This comes there. 3/4 in value, that is those who are holding good amount of shares, and also the numbers, majority in number. Here there is one small twist. Approval of shareholders are required of the banking company. But how much? Majority in number is there, but representing 2/3 in value. Concept clear for banking company?
Yes, sir.
So majority in number and 2/3 of value. A notice has to be given in the newspapers. Okay, so that notice is given to all the shareholders, and if the shareholder is not there at the address, that's why they prefer to give a newspaper advertisement where the registered banking companies are situated, so that they get the notice of this, so they attend the meeting. Imagine everyone has voted, but one shareholder, he is always negative in life. Everything is there. He likes to say bad will happen, why it happened with me, why it didn't happen with my neighbor, why Sharma ji ka beta is doing so well. Okay, now this kind of person, you think he will give an approval to the scheme of M&A which everyone is approving?
No, sir.
Will he give approval or no? This
No,
kind
sir.
of person, no. So how much ever you convince him, he will not agree. Then what do you do to such kind of a shareholder? Do we bulldoze him and say chal hut, and we say get lost, your shares will be compulsory taken over, or we give him an exit route? What is the fair thing to do?
Give him an exit route.
So this is the answer, that even if there is any shareholder who is voted against the scheme, so he is also has some rights, shall be entitled to claim from the banking company concerned, and RBI will decide the valuation in respect of the shares held by him, their value. Understood? So dissenting shareholders also have a right to ask for the price and leave the company. Very, very simple, those who didn't agree. Now, if the scheme is approved by the majority of the shareholders, can I do the merger, or I have to first take RBI approval?
First, we will take RBI.
Yeah. So first, sorry, my bad. First, we will take shareholders approval. Then we will tell RBI that yes, we have approved it. Right? It won't be other way around. Now I'll take RBI approval and shareholders have denied it. Shareholders said no. So RBI will say, you think I was stupid or you wasted my entire time, I reviewed the entire document and your company didn't agree. Does it make sense?
No, sir.
So first the company will make up its mind, that is the shareholders will make up the mind. Then they will just go for RBI for sanctioning, for approval. Then RBI will sanction the scheme. Okay, fine. Everyone has approved. Let's do it. The property will be transferred. The liabilities will be transferred. And the amalgamated companies will be dissolved. Amalgamated company will be dissolved. Yes or no? No. One second. Sorry. The amalgamating companies will be dissolved. And all the... Okay. Again, let me just take you through again. So, A, there is bank A, there is bank B. Both of them are getting merged and now they are becoming bank AB. This will get dissolved or no? This will also get dissolved. And this is the resultant company, AB. Yes?
Yes, sir.
Please tell me which is the amalgamated company.
AB is the amalgamated company.
Amalgamated मतलब joint company और joining companies are amalgamating कौन सी है?
PMP.
So these are the amalgamating companies. So amalgamating companies will be dissolved and their assets will be transferred to the amalgamated company. Concept clear?
Yes, sir.
Okay. Then where the Reserve Bank directs dissolution, the order directing the dissolution should be given to ROC. So when ROC will also give an order to dissolve company Bank A and Bank B. So once the dissolution is there, then you have to inform ROC. Then ROC will issue your certificate, and this order is a conclusive proof that the amalgamation, all the provisions of amalgamation have been complied with. Concept clear?
Yes, sir.
And nothing in whatever we have read shall affect the powers of central government for amalgamation of two companies under 237. 237 is what? Central government's power to compulsory amalgamate two companies in public interest. So कहीं पे भी did we read anywhere where we are saying that central government का power खत्म?
No, sir.
So that's what they are saying, that nothing from what we have read has affected the powers of central government to merge two companies. Central government कहाँ आ गया इसमें? तो वो तो power जैसा है वैसा ही रहेगा. So the power will remain of central government to amalgamate compulsory amalgamation of two companies. Now very important, which I feel will come in the exam. First, section 230 to 240 talks about compromise, amalgamation and arrangement. In simple words, we call it as M&A. Yes or no?
Yes, sir.
Yeah. From here, section 232 talks about normal merger procedure. Till here it is clear?
Yes, sir.
That is also called as NCLT route. What it is called?
NCLT.
NCLT route means I have to go to NCLT with the scheme and take the approval. Exactly after this section is another section, which is section 233, which talks about a short form merger. They call about what?
Fast track merger.
Short form or fast track merger. Fast track merger. Is it the NCLT route?
No, sir.
NCLT route is long. That is why we have a fast track merger where you don't have to go to NCLT. NCLT approval not required. तो फिर कहाँ जाएंगे? किसका अप्रूवल लेंगे?
ROC.
Very very good. ROC or RD approval. Clear till here?
Yes, sir.
Now, this is fast track. This you should know, and in my opinion, after the amendment, there is an amendment which I'll take you through. Fast track merger will come in your exam. No matter which attempt you sit, these two, a fast track merger is extremely important. Clear till here?
Yes,
Yes,
sir.
sir.
Can you all, let me see your knowledge, tell me what are the provisions for fast track merger? How much % consent is required? Do you all know?
So 90%.
Very good. 90% approval is needed of not only shareholders but also creditors.
Creditors.
Next, you require NOC from whom? अभी तो बोला NCLT route है. Now only I said it is NCLT route, means you are approaching whom? ROC. Oh, sorry, I said it is a RD route, ROC route. So you will take NOC from whom? ROC. ROC will talk to other regulators also. They will talk to SEBI. They will talk to whoever, the income tax authorities. They will ask other regulators, tax authorities, other regulators. He will ask, problem है क्या इधर? इसको fast track में जाना है. They'll ask. Now, can all companies apply for fast track merger, or only certain companies can apply?
Certain companies.
Which
Like
certain?
Two small companies.
Who?
Two small companies.
Very good. So where there are merger between two small companies.
Merger between holding company and a subsidiary company.
Very, very good. So a merger between a holding and a subsidiary will come here. And one more they have given, which has newly been added. Because of which I feel it will come in the exam. That is startup company. Merger between startup company. So I'll come to it in some time. Startup companies. Clear? So this is important. So let's go quickly and finish off fast track merger. But if at any time someone goes and imagine it's a fast track merger, do you think someone can complain fast track mat karo, that don't do fast track? Yes or no? Complain someone can do or no, that don't do fast track? If someone goes and says and to ROC that don't do fast track merger, then an order can come that go as per NCLT route and you have to follow the NCLT route. Concept perfectly clear?
Yes, sir, clear.
Yeah? Chalo, fat we'll finish. Now, regulatory approvals for RD, ROC, official liquidated. This was for fast track merger. Section 233 says a scheme, if it is there between two small companies or a holding and a wholly owned subsidiary. So can a holding and subsidiary be merged under this provision?
Yes, sir.
Or holding and wholly owned only are allowed? 100% होना चाहिए ना wholly owned, not any subsidiary.
Wholly owned. Okay.
Wholly owned, okay. A notice, now again, such classes may be subject to the following conditions. So they have given you the conditions for fast track merger. Merger of certain companies heading है, but नाम क्या है उसका? Fast track merger. So a notice will have to be given inviting objection. किसी को objection दो यार. I'll invite objections from whom? ROC, official liquidator. Okay, within 30 days. Okay, by the scheme within 30 days by the transferor or the any companies and the transferee company. A notice of the scheme inviting objections from the ROC and official liquidator within 30 days is issued by them. So the two companies, that's the transferor and transferee company, involved companies will tell the ROC, objection है तो 30 दिन में बताओ. Let's say if the objection is received. The objection is received, is considered by the company and the scheme is approved by the respective members. At least 90% consent is needed of the total number of shares. So whatever is objections, I have adjusted it, and now 90% approval is needed. Concept clear?
Yes, sir.
Now I should also have to get a solvency certificate, declaration of solvency. फटाफट कर रहे कहीं insolvent ना हो जाए. So during that time you have to get a declaration of solvency that the company is solvent and will remain solvent till this entire procedure will get covered. The scheme should be approved by 90% of whom? Who I said?
Shareholders and creditors.
And creditor. तो यहाँ पे creditor mentioned है और यहाँ पे shareholder mentioned है. समझे? So 90% of consent of both. Now the transferee company, the buyer company, shall file a copy of the scheme with the central government, the registrar. See, central government is RD, below RD below that is ROC. So it's the same line. So they are in the same group. So if I give it to central government, ROC, RD, it's one and the same. Where the register office lies. Okay, on receipt of the scheme, the ROC has, if he has no objection, the central government shall register the same and issue a confirmation to the companies. If the ROC has any objections, he will communicate the same to the central government. Okay, and if no communication is made, it will be presumed that they have no objection. If ROC RD has not made any objection, means it will be presumed that they have objection and they are sitting quietly and not. Sometimes when anyone gets angry, how they don't stop talking. You think that is what we will presume, or we will presume that they don't have objection?
They don't have a.
We'll presume that they not made any objection, means they don't. Will be presumed that they don't have any objection. If the central government, after receiving the objection, is of the opinion that the scheme is not in public interest, tell me, the shareholders will get a shock of their life or no?
Yes, sir.
So they will get a shock of their life that the central government has received the objection from ROC, etc., and they have opinioned that it is not in public interest. Okay. Then what will central government do? After they say that, they will inform tribunal. They will go and complain to NCLT only. And listen, this objection we have received. Within 60 days of receipt of the scheme, okay, and tell the tribunal that you consider it under 232. Samjhe?
Yes, sir.
That they will say that we've received the objection, we are not going to do, you take it under the normal route only. On receipt of the application from central government, if the tribunal, for reasons recorded in writing, is of the opinion the scheme should be considered under procedure later under 232, the tribunal may direct accordingly. And then they will say fast track nahi, normal method chalega. Clear?
Yes, sir.
A copy of the order confirming the scheme confirm हो गया तो खुश होने का, shall be communicated to the registrar. Now you can distribute the sweets. Okay, you have to go to the registrar with sweets. Yes or no? मिठाई का डब्बा लेके ये लो, scheme approve हो चुकी है. Now the registration of the scheme shall be deemed to have the effect of dissolution of transferor without the process of winding up. Have you all understood? This is sometimes they ask in an interview question, what do you mean by dissolution without winding up? Dissolution without winding up. Winding up means sale of assets, realization of the funds. Has that happened?
No, sir.
No. So there is no winding up procedure that will happen. Company will be dissolved without winding up. And only the assets will be now in the name of the new books of the new company. The registration of the scheme shall have the following effects. Very simple effect this will have. Market is very important, and this is all that we are doing of section 233. So remember, you have to write so many points. That the transfer of assets and liabilities will be done. The charges. If the transferor company had charges, loans, it will now be applicable and enforceable against whom?
The resultant company, the amalgamation company.
Very good. Transferee company. Legal proceedings on the transferor will be now enforced and continued against transferee company. Perfect. Where the scheme provides for purchase of shares held by the dissenting shareholders. Purchase of the shares. वो याद है मैंने एक बोला था, एक बंदा था. Do you recognize this guy? What to everything? What does he say?
No.
No. So this kind of dissenting shareholders also are there. To pay them off is now the liability of whom?
The transferee company.
Everything will now be that of the transferee company. Okay. And this all is there. You can read. Not important. Remember I told you all one amendment very, very important for fast track merger. Yes or no?
Yes, sir.
That startup company point. Now, the rule 25(1)(a) of the Companies Compromise Arrangement and Amalgamation Amendment Rules 2021, a scheme of merger and amalgamation under section 233 may be entered between any of the following classes of company: two startup companies or one or more startup with another one or more small company. So they can also opt for what? 233 fast track merger. Understood? So it is between two startups companies or one startup and one small company. Concept clear? So now startups are also covered under fast track merger. What do you mean by a startup company? They have been, it's a private company, okay, and it has been acknowledged as a startup, as an innovative company as per the Department for Promotion of Industry and Internal Trade. Concept clear?
Yes, sir.
Now we are done with section 233 also. So I just told you all, in section 230 to 240, what was section 232?
NCLT mode.
NCLT route. After that we said NCLT is too long, yaar. So then government introduced a new section 233, which is fast track merger, which is which route?
ROC.
Central government route. Clear? Yes or no?
Yes, sir.
Now we are saying थोड़ा और बड़ा सोचो यार, थोड़ा what could be biggest if I do international trade? Yes or no?
Yes, sir. Cross border.
Very good. So you talk about cross
Border merger.
border mergers. Okay, is given under your section 234. This you cannot forget. You from here I can give you in writing that it will come in your exam. So better to do it properly. Clear till here? Fast track cross border has to come. Now coming to cross border. Cross border, very, very simple. Same methods will be there. Tell me one thing. It's a cross border merger. So will I tell that by default you should follow 233 or 232?
By default, you have to follow 232, sir.
Very good. Now see, common sense. Now this is a cross border massive transaction. Here only small companies were covered. Here we will say by default the provisions of 232 shall apply mutatis mutandis. Clear?
Yes, sir.
Same to same as far as applicable, the provisions of 232, the steps for the NCLT route will be there for this. Now, in addition to that, one more regulator will come in because of cross border. Can anyone tell me which?
RBI.
Reserve Bank of India. See, understand, foreign currency who's regulator?
RBI, sir.
So when the foreign company will pay money, they will pay in which, they'll pay in rupees or what?
No, foreign currency.
So foreign currency regulator is RBI. Authorized dealers. Whenever there is foreign currency, international trade, RBI is the regulator. Clear? So RBI approval have to be taken. Next, when I am merging, can I merge with a company which is in Pakistan?
No, sir.
Afghanistan?
No.
North Korea?
No, sir.
Somalia?
No.
They will say, why are you going into all these prohibited areas? You can't see Dubai, you can't see China, you cannot see USA, you can't see European countries. Again, you want to go in Somalia and Afghanistan. So they are saying that, listen, there are certain territorial restrictions with whom we cannot merge. Understood? Understood this?
Yes, sir.
So jurisdiction, they will say that listen भाई अभी कहीं इंडिया के बाहर जा रहे हो, going out of India, don't merge with anyone else and come. Clear? So these two are important points and these two are the new points. That's it. Rest all you will see that it makes sense. Next is, by default, whenever there is a foreign company, we are issuing shares, there is a valuation done. Have you heard of that?
Yes, sir.
अभी प्राइवेट कंपनी होगी तो एक शेयर का वैल्यू निकालना पड़ता है ना वैल्यूअर के पास से. So there are registered valuers will have to be appointed to value what is the share price at which you are issuing to them. It shouldn't be at a discount than what you are giving to domestic people. Understood?
Yes, sir.
For example, if Indian company is giving to Indians at expensive price and to foreigners at less price, is it okay?
No, sir.
Absolutely not. Read the FDI regulations. They clearly say that you cannot issue at a price lower than what is offered to domestic people. अपने वालों को महंगे में दोगे और उनको सस्ते में दोगे, ऐसा नहीं चलेगा. Clear यहाँ तक?
Yes, sir.
So now these 3 points, keep it in mind and we will finish off 234 also. Now, first the section. Which section is it? 234. 234 deals with merger and amalgamation of companies which are beyond with foreign companies. The provisions of section applicable to M&A shall apply mutatis mutandis. Clear till here?
Yes, sir.
Clear? Now, it will be done in consultation with RBI. Now, you tell me एक और important part, and then I think it's done. Inbound merger and outbound merger. Which one according to you is allowed? So let me explain. In inbound, what happens? We're talking about.
Resultant company is an Indian company.
Very good. So what is happening? There is a foreign company that has merged with an Indian company, and the resulting company is an Indian company. अच्छी बात है कि नहीं?
Yes,
Yes, sir. अच्छी बात है.
अच्छी बात है. We'll be very happy that foreign company is dissolved and all its assets and everything is coming to the Indian company. The Indian company is surviving. Perfect example of this is of Tata and Jaguar and Land Rover. So Tata was the buying company and Jaguar and Land Rover now the Tata is the owner. Outbound, foreign company is there. Foreign company merging with Indian company and resulting company is a foreign company. Here the Indian company will cease to exist. This is called as outbound merger. ये अच्छी बात है क्या?
नहीं.
no,
तो
sir.
क्या हम इसको अलाउ करेंगे? Will we allow this kind of transaction? Which we will allow? Inbound, outbound, both or none?
Both, sir. I think both.
Answer is we will allow both as per Companies Act 2013. Inbound and outbound mergers both are allowed. As per Companies Act 2000 in 1956, only inbound were allowed. So what used to happen is the foreign companies say, "Arey wah, how like this? You are allowing our company to dissolve. That is fine. When your company is merging, you are not allowing. So does it look at fair?"
No, sir.
So they said all these territorial barriers, foreign companies will also restrict us then. Okay, we do. So then we said that let it keep a free trade. Both is allowed. Okay. And Indian party is also getting money or no? Or they will leave for free and come? You will get
Money.
consideration or no? If foreign company buys you out.
Yes, sir.
तो फिर sad होने की जरूरत क्या है? Hurt in every time you all want to be sad. So this is also a good thing. Understood? Here we are getting money. Here we are getting business. So under the Companies Act 2013, unlike 1956 Act, outbound merger is also allowed. Concept clear?
Yes, sir.
Now, subject to the provisions of any other law for the time being in source made with the prior approval of RBI, merge into a company registered under Companies Act or vice versa. This vice versa was added. Okay, we can be merged into a company which is a Companies Act 2013, or our company can get merged into a foreign company. So they did not write directly, they just wrote vice versa in a way that ego पे बात आ रहा था कि अपनी company take over हो जाएगी. So they said that we can be any company which is a foreign company can be merged into Indian company or vice versa. Clear till here?
Yes, sir.
Now, which was the section?
234.
Read with Rule 25A. Read with Rule 25A. Clear till here? This you have to write. Rule 25A. The said rules were given here that M&A of a foreign company with an Indian company and vice versa has been allowed. Foreign company after taking approval of RBI, and you have to follow provisions of section 230 to 232. Can you merge with all this jurisdiction which are there in Annexure B? Annexure B covers all the negative list countries.
No, we cannot merge.
Yeah. So in Annexure B, they've written that what all territories are allowed and what are not allowed. So if you are there in anything which is violating Annexure B, you cannot merge. So a company may merge with any company in any specified in Schedule B after taking approval of RBI and complying with 232. So Annexure B says that it is not following under any of this restriction. That means it is under the allowed category. Again, so company may merge with any company falling under a jurisdiction mentioned in Annexure B. So in Annexure B, they have mentioned which all companies are allowed. Okay. The transferee company shall ensure the valuation is done by proper valuers. Clear till here, as per internationally accepted principles. The concerned company shall also file with the tribunal under 232. RBI has issued cross-border regulations. Okay, for this, what are the cross-border regulations given? The regulation name. This is it. See, cross-border regulations. Which year at least you all can tell that?
2018, sir.
Very good. So, FEM cross-border merger regulations 2018. So I will write 234, I will write 25A, and I will write annexure. कौन सा था annexure A, and I will also write 2018. Clear till here?
Yes, sir.
So all this you have to quote when it comes to your foreign company. It's short exam question.
So,
Yeah.
do we need to remember Annexure A?
What is there in Annexure A, you don't have to remember. Okay. But in Annexure A, when you go, I think it is there in one of your chapters of foreign companies, dedicated chapter is there for cross-border mergers. In that they've given you what is Annexure A, where it says that you can merge with any company of any jurisdiction as long as it has complied with the PAMLA laws, it has complied with the Foreign Action Task Force, it is a member, the banking is member of those agencies. So all of that they have done, means you just complied with the money laundering laws and not in the negative list of the country.
Okay,
So you can check it up also. Okay, here they in your other chapter they have given. Now again, just few forms they've given. You can just read it up here. Some forms. Provisions under the company's compromise, arrangement and amalgamation regulations. Just a few form numbers. First is CAA 9. Form numbers for 230, 239 is a notice to invite objections from the registrar and ROC under section 233. Remember we are doing?
Fast track merger.
It will be in fast track merger, will be invitation to objections will be in CAA 9. Again, 10 will be declaration of solvency. Then comes, so 9 and 10 done. Now notice to the members of the meeting accompanied, all fast track merger only, shall be accompanied by. Now we also have a fast track merger chapter. Okay, so in that I've covered everything in proper, even here I've completed, but there I've made you learn the form numbers also. So 9, 10, here they're saying declaration of solvency should be given, 10. Now 11. So we are doing form CAA 9, 10, 11. 9 is what? Objection, notice for objection. 10 is what?
Declaration of
Declaration of
Solvency. And 11 is what? The
copy of the scheme.
scheme. Okay, a copy of the scheme shall be in form CAA 11. Scheme will be in CAA 11. And in the scheme, okay, a copy of the scheme shall also be filed along with form CAA 11 with the ROC in form GNL 1. Now GNL is a general form, okay, and under this general form I will attach CAA 11 and along with that other supporting documents when I will come to know that which are the supporting documents to be added. Clear till here? Understood or no?
Understood, sir.
Yeah, very good. So copy of scheme
Yes, sir,
is
understood.
copy of scheme will be in CAA 11. That has to be attached to GNL 11 and then sent to the ROC. Then comes 12. Central government gives confirmation, will be in 12. So I'll ask you all the form numbers in order, okay? Let's see. Now objection or the as received from the ROC or central government that they have a problem and central government is of the opinion that it is not in public interest, it may be file an application before tribunal in CAA 13. When central government will complain, it will be in what? So your central government has given a good order, your central government has given us a shock. So this will be of 13. Clear till here? So we've done CAA 9, 10, 11, 12, 13. And this is all under section 233. Yes or no?
Yes, sir.
This is notice for objection. Notice for objection. 10 is what?
Declaration of solvency.
Solvency. 11 is your
Copy of the
scheme. 12 is
Confirmation order.
central government gave a confirmation order, and in 13 central government gave a
Shock.
shock.
Objection.
Objection they have raised. Okay. Then once confirmation order is received by the central government or the tribunal, okay, that they are confirming the M&A transaction, then I have to inform. Now in all this, it is happening between me and NCLT and central government. Yes or no?
Yes, sir.
Fast track merger, the central government knows everything, ROC, etc. Your normal merger 232, tribunal knows. When either of them have confirmed, okay, central government in that case and this central tribunal have given confirmation, then I have to inform ROC in INC 28. INC 28 is specifically when we have to inform ROC of a order of a tribunal. Clear?
Yes, sir.
Means INC 28 is whenever we get a court order, don't you think we have to inform registrar of companies?
Yes, sir.
That will be in always in INC 28. Clear till here? and then we have your INC 28. There's an order copy to ROC. Court order copy to ROC. Clear till here? So these are the form numbers. Then this we have done, startup company. Now we'll be seeing your two kind of regulators and two kind of industries that they will talk about. One is IRDA, that is your Insurance Regulatory Development Authority, and your TRAI, that is your Telecom Regulatory Authority of India. Now, first we start off with IRDA. Okay, we will be doing section 36, 37 of the IRD Insurance Act and 37A. Okay, so these sections are there which they will be talking about M&A before we come to TRAI. Okay, so let's see, very simple, three sections you should know, 36, 37 and 37A. Of which act? Insurance Act 1938. Okay, first very simple question. If there is any insurance company, like let's say Reliance Religare, or we have New India Insurance, or you have your LIC, Life Insurance Corporation of India. So all these HDFC, Ergo, I don't know, you all must be having your health insurance, some might have life insurance. So whichever insurance company is there, who is the regulator of that insurance company? It is IRDA. Okay. Now, the Insurance Act 1938 applies. It says that whenever there's an amalgamation, transfer, it will be regulated by IRDA, called here as the authority. So, where any application under section 35 is made to the authority shall cause a notice of the application to the holders of any kind of policy of the insurance. Okay. For example, if I am holding my health insurance in HDFC Ergo, and HDFC Ergo has been taken over by Star Insurance, don't you think as a policy holder I should be informed? Yes or no? Yes. So obviously the first step is the authority will inform the policy holder. Okay, then maybe we might have some objections, because one of the biggest objections that we can have is the premium amount and the benefits in the old company. That if it is merged, if it is taken over, then my insurance premium I used to pay XYZ and I used to get a cover of so and so. Will the same last? What are the new terms, policies, etc. This is from the insurance policy holders. We will see what objections employees can have, what concerns employees can have, what regulators, what other authorities can have. So first thing is the IRDA will hear out, and after hearing the directors of the insurance company, considering the objections of the policy holder and any other person who it considers entitled to be heard, may then approve the M&A, that is a merger and amalgamation agreement. Till here it is clear. So what does section 36 talk about? Section 36 says that we will ask the policy holder. The policy holders will be given an opportunity of being heard to give objections. Clear till here? Yes. Now we are looking at the next section, that is your section 37 of the Insurance Act 1938. It says that the statement now after amalgamation, okay, when an amalgamation takes place between two or more insurers, okay, so two insurance companies have merged, where any business of the insurer is transferred, okay, so either there is a new company after merger, or one business has transferred its entire business to another insurance company, that is a sale of business. Okay, so you will have, the scheme will have to be approved by the authority, IRDA, yes or no? The IRDA we just read in 38, it will approve after hearing objections. So whenever there is a business merger of insurance companies or a business transfer of insurance company, IRDA will confirm the scheme. Now we have to give to the IRDA certain documents. Yes or no, so that they can approve? Yes or no? What all documents will you give? Very simple. Scheme of the document, scheme of M&A. Yes or no? A certified copy of the scheme. You will give the balance sheet. You will give all other reports of M&A or transfer on which it was founded. That is the rationale for purpose of merging. What is the future after merger? Yes or no? That you will give or no?
Yes.
Yeah. And also a declaration, okay, signed by every party concerned, okay, whether both the companies or their representatives, like your chairman and the principal officer. Okay, now what kind of declaration is given? That according to them, all the payments will be given and it is in the best interest of the insurance and policy holders. That to the best of their belief, every payment made on account of amalgamation is fully set forth. जो भी payment करना था सब कर दिया. All the payments have been made and no other payment beyond the set forth have been made. जितना देना था उतना दे दिया. उसके beyond किसी को bribe, किसी को extra money वो कुछ नहीं दिया. So whatever is required to be given has been given and there is no extra payment beyond what has been approved. That means there is no money given away and no kind of benefits given before. Because what happens when I'm shutting down the business, don't you think many people will try to do some kind of fraud, some kind of preference being given to someone? So they said nothing, it has gone very simple, normal technique we have sold. Where the amalgamation or transfer is not made in accordance with a scheme approved by the authority, all this has to be given. Next, 37A. We saw 36, that objections will be allowed. 37, what did it talk about? What all documents are to be given? 37A. Now this is also very important and interesting as well. Can there be a forceful merger ordered? Yes or no? Compulsory merger. Yes or no?
Yes.
Obviously, we've seen even central government has the power here, even IRDA has the power if the authority is satisfied that in public interest, in the interest of policymakers or for proper management or in the interest of the entire insurance business, it is necessary to prepare a scheme of amalgamation of insurers with any other insurers. Okay. Provided no such scheme shall be prepared unless the other insurers given his written consent to the proposal. So, if they feel the authority can prepare a scheme of amalgamation and inform that we are merging you with XYZ thing. So, mostly they would implement this kind in government companies where government is like LIC is there. So, they would want to merge on those. Now, again, when a scheme is merged, when a scheme is prepared for M&A of insurance company, the scheme will be a small document having company A is merging with company B or extremely detailed.
Extremely detailed.
So here they give you what all the scheme will contain. All these, you can see all these topics the scheme will talk about. That is why it is very detailed. Okay, so this is all what all the scheme will contain. Now, according to you, what all will the scheme contain? Very simple. Scheme will contain the basic information of the company, yes or no? Of both the companies?
Yes.
Yes. So the constitution, it has been, company A formed on so and so year, having a registered office so and so, having so many powers, rights, interests, etc. As well as that of the other company. The transfer, details of the transfer on the terms and conditions specified in the scheme. Okay. When it will be transferred to the transferee, all the assets, liabilities, normal transfer M&A that we're talking about. Now, when the new company is there, you think the same management will be there or the management can change?
Either.
Yeah. See, very common sense. A and B have merged, but the new company will have a different set of managers, different postings, right? Employees could be same, but the designation could change.
Yes, sir.
So there will be not 200, like there are 10 directors here, 10 directors here, maybe we might not have 20 directors, or we might have a seniority. They will completely decide any change in the board of directors, or if they want to appoint new directors. Okay, it shall be made and it should be approved by the authority. Now, whenever they are merging, the new entity or the companies will have to alter their M&A, MOA, AOA if needed to give effect to the amalgamation. Okay, so very simple that necessary documents will have to be altered if necessary to give effect to the amalgamation. So that also they will say that, in the scheme we have also approved for amending the articles to, facilitate, permit, allow the merger to happen. After the merger, they will shut down the business or continue the business.
Continue.
So there will be a continuation of business by the transferee company. Okay. If there is any pending litigation, if there is any pending loan on the original transferor, now they will be enforceable against the transferee. Simple, yes or no?
Yes, sir.
Okay. Now again, reduction of interest or rights in the shareholders or the policy holders. Okay. Can be done, yes or no, in public interest. Will they allow, first of all, will the shareholders be happy with the lesser rights?
No, sir.
No. So they are saying that who are not happy or whatever reason, you can pay in cash. You can pay them in cash. Okay, in respect of whatever has been finalized by IRDA. Then you will allot the shareholders, okay, before of the insurers held by them. Therein, before the amalgamation, whether therein is any interest has been reduced and whether shareholders are claiming for cash and not allotment of shares, then that has to be given and fully settled. Employees will remove and keep new employees, or the existing employees will try to continue them?
Existing employees.
Obviously, the continuance of their service of all the employees should be there. Okay. In the transferee business at the same remuneration on the same conditions of service which we were getting as if just immediately before the amalgamation. Very important point, otherwise there will be strikes, lockdown, and they will not be able to implement. Where any of the employee of the insurer is not being a workman within the Industrial Dispute Act, okay, the transferee at any time before the expiry of 1 month on which the scheme is sanctioned by the central government, intimated their intention of not becoming employees of the transferee company, the payment of such employees compensation should be done, okay, to which they are entitled under the Industrial Dispute Act, such as pension, gratuity, PF, retirement benefits, etc. Meaning what? If there is an employee and that employee doesn't want to go in the merged company, so don't you think we have to clear off his employee dues?
Yes, sir.
Yes. Any other terms and conditions? So here it is no hard and fast rule you have to put these points, but these are just some points which you have to put in the scheme. So in the exam you can learn a few points and add it up. Then again this line will always go any incidental, consequential and supplemental matters to secure the amalgamation to be fully effective and carried out. A copy of the scheme should be given out to the authority. The authority may make modifications as it deems fit. The scheme, now this is important. Okay, first, all those documents, all those details will be contained in the scheme, and very simple details. क्या होगा, कब कौन जाएगा, क्या मिलेगा उसको, all those details will be given in the scheme. What pricing, etc. Now, after the scheme has been approved, it will be tabled before the central government for sanction. Ye clear? So, a scheme of insurance company will be placed before the central government. Okay? And then the central government can suggests what is to be done. Now, every policyholder or shareholder or member of each of the insurers before amalgamation shall have the same rights and interests against the insurer resulting from amalgamation. Resulting company, जो new company है, उसके अंदर पॉलिसी राइट शेयर होल्डर्स मेंबर्स के सबके सेम होंगे. द न्यू कंपनी will give the same rights to the shareholders, policy holders and members which they were getting before amalgamation. Yes or no? Simple?
Yes.
Yeah. Now, next is compensation so assessed shall be paid to the shareholder. So as we had seen earlier also, the shareholder is not happy and we can give him compensation. If imagine the member is not happy with the compensation, where can he go in appeal? Very, very, very important. Okay, so this is very important. What is it? Where you will go in appeal? To SAT, Securities Appellate Tribunal. Clear till here? So the powers of SAT has been expanded, and even insurance related issues, the appellate authority is what? SAT. Clear till here? So any member or shareholder aggrieved by the assessment of compensation by the authority, it may within 30 days from the publication prefer an appeal to SAT. Even from NCLT. Okay, so even in Competition Act also, if you see, the appellate authority is now being transferred to, certain authorities which were very powerful like SAT, NCLAT, etc. Clear? So what they are doing is, what is the logic? They don't want to have too many appellate tribunals which are already there and running. We will give the matters to them only. Clear till here? So that is the logic. If you are not happy from IRDA under this thing, you will go to SAT as an appellate authority. Concept clear?
Yes, sir.
Yeah. So the sanction accorded by the central government shall be conclusive evidence, and that is the final judgment. So from this, whatever central government says is conclusive evidence. The authority may vary the scheme under this section on or from the date of coming into operation of the scheme. It shall be binding on the insurer. Next, in merger what happens? All the properties, all the liabilities get transferred to the transferee company, to the transferee insurer. If there is any difficulty arising in effect to give provision to the scheme, the central government may by order, which it appears necessary and expedient for the purpose of removing the difficulty. So if there is any difficulty, the central government can make changes to remove the difficulty. Copies of every scheme, as I told you, it is placed, the central government approves. So, but it will be placed before both the houses of parliament. Clear till here?
Yes.
And then it will, after being tabled, it will be sanctioned by the central government. While reading any of these provisions, did I ever say that insurance company A cannot merge with insurance company B and C and D? Did I ever say that an single insurer merging with several insurers is not allowed?
Yes, sir.
No. So that is what they are saying. Nothing in this section shall be deemed to prevent the amalgamation with an insurer by a single scheme of several insurers. Okay. So you can merge the schemes also, prevent the amalgamation with an insurer by a single scheme of several insurers. So several insurers might be having several schemes. I can merge it up. That is also allowed. Now, the provisions of this section of any of the scheme made, it shall have effect, doesn't matter what is stated in any provisions of any other provision of this act. Provisions of this section of any scheme shall have effect notwithstanding. That means whatever given is in this section for IRDA, whatever you read, is having overriding effect. अगर कोई दूसरे लॉ में कुछ लिखा है तो वो वैलिड नहीं होगा, ये लॉ वैलिड होगा. Clear? Now, once we have done with IRDA, so IRDA we saw 36, 37, 36, 37, 37A. You can write that and a few points, very simple for IRDA. Now we'll be seeing the next one is for TRAI, Telecom Regulatory Authority of India. Now, first you should know the ministry which is there. Which is the ministry that is there? So it is Ministry of Ministry of Communication. So all this comes under which ministry? Ministry of Communications. So there is Ministry of Communication. Under that we have the Department of Telecommunication. Department of Telecommunication. Till here it is clear?
Yes.
Yeah. Okay. Now the Department of Telecommunication, Government of India, they had made certain schemes and guidelines for transfer or merger of certain telecom service licenses under unified license on compromise, arrangement, amalgamation of companies. Have you understood this line the moment I read it or no?
Yes, sir.
No. Obviously. So what it means, let me give you an example where you will understand properly. Vodafone merged with which company?
Idea.
Vodafone merged with Idea. Both were telecom companies. So can I say that there will be a transfer of, and this I think became a new company like VI Idea, they had a different logo completely. Now this company and this business, okay, don't you think Idea had certain licenses which will now be transferred to the transferee company? There will be a transfer of licenses, telecommunication licenses. Yes or no?
Yes, sir.
Yes. So this is what they are saying, that power has to be there in law. So they have made certain rules. So I'll take you through that also. See, this was the license. Ministry of Communication, as I told you. Then we have the Department of Telecommunication. Now which one we are seeing? Merger of licenses and transfer or merger of license. Between whom? Now this is the actual document got from the Ministry of okay. So let's see. First, this is of transfer of license between Vodafone and Idea Cellular. Understood till here? Transfer or merger of licenses between them. Okay, so this is the document that is actually there, and the Secretariat of TRAI has signed it. Now, coming back to our part where we were reading, that there was a transfer or merger of these licenses, yes or no?
Yes, sir.
Yeah. Under a scheme of M&A. Under a scheme of M&A. Yes. So now let's read. So government had issued certain guidelines. Guidelines for transfer or merger of telecommunication licenses. Okay. On compromise, arrangement, amalgamation of companies. Till here now it is clear.
Yes, sir.
Now I'll explain what is unified license also, because most of the time they will come to unified licenses here. Now in India, there is a telecom policy, that is your Telecom Policy 2012, which got amended in 2018. Okay, so first the national telecom policy is there. They were giving different kind of licenses, independent licenses. Let's understand. 2G is a separate license, 3G is a separate license, 4G is a separate license, 5G is a separate license. Yes or no?
Yes, sir.
Yes. Second, there is very different kind of licenses also called as access licenses. Access licenses. For example, what the government has done, they have divided into certain circles, and each of the circles they take bidding, and various telecom companies bid for those circles, so they get rights in that circle. Till here it is clear?
Yes.
And license, what kind of access and services do they give? Okay, so this is access licenses to provide certain services. Now services could be telephone services. We have telephone services, telecom company, right? So landline services, wire or wireless. Even you have internet services, completely different service. Then you have radio services is different. Even your mobile portability is also a service. You want to go from one dealer to another dealer. I want to switch from Idea to Jio. So there is a mobile portability allowed where my same number I can port to another telecom provider. Yes or no?
Yes.
Yeah. So all these activities or services I told you earlier, we had different licenses for it. Now government has also given an option that if you want, you can go for a unified license, where all in one. What you would prefer?
All in one.
So unified licenses are preferred, and that is what is there, really run today by the top company. So here under unified license scheme. Understood now?
Yes.
Yeah. So this I've explained. Now TRAI on 30th November 2017 has given recommendation for ease of doing business. Now they've given you various chapters. 1 gives you the background, 2 gives you the inputs from stakeholders received, and 3 gives you the summary of it. Not very important. Now let's go ahead. One, we know that central government and TRAI is the regulator. Till here it is clear?
Yes.
Why central government? Because Ministry of Communication is also under central government. So it's a central law. The telecommunication is there for all of India, not a separate state. For all states. And the authority that has been created is TRAI. If you're unhappy from TRAI, you can go to Telecom Regulatory Appellate Authority. And you're not happy from TRAI, you can go to Supreme Court. Concept clear?
Yes.
Yeah. Now, they use of a lot of spectrum licenses. They use these words like that. Okay. So what is this 2G and 3G and 4G, and now that is running is in 5G. Now, just because in this regulation which we will be reading, they will use some technical terms related to telecommunications industry. So isn't it important to understand telecommunication, certain terms, so that we can build a 5-mark answer?
Yes.
Yes. So first is spectrum. What do you mean by the term spectrum? Spectrum is nothing but electromagnetic waves on which the communication is done. So through these waves, data is transferred. Data is transferred through these electronic waves which are called as spectrum. Now there are different kinds of electromagnetic radiation, and on basis of those frequency at which these electromagnetic radiation is emitted, different services can be provided. Till here it is clear?
Yes.
Can you tell me, with high radiation we will be affected, or with less radiation will be harmful? High radiation, okay. So with very high radiation, it can even affect the cells of human beings. At low radiation we are not affected, but as the radiation increases, okay, electromagnetic radiation, it has been proved that it affects the cells of a human being also. So when we have these telecom towers and all these other, they all emit radiation. Till here it is clear?
Yes, sir.
But what they say that it is due to less frequency, so you don't have to worry about your health. So let's see. First is when you have a smaller wavelength, okay, since the frequency is less, with that frequency level, we can run the radio, television. With the higher frequency is run for cooking, radar, etc. More higher frequency, so they use these electromagnetic radiation for different purposes, with the highest radiation coming for X-rays, CT scan, etc. So if anyone is gone for a CT scan or a X-ray, they don't allow too many people, they don't allow kids, they don't allow pregnant women. Why? Because it affects radiation. It emits radiation, and the highest level of radiation is given, okay, which are gamma rays, the highest level. Now each wavelength depicts in how much time the round is done from plus to minus. Now these are all little technical, not for us. The gamma rays are extremely harmful, will affect the individual on cell basis. Individual cells of the body can be changed and affected and even killed. This high level of radiation is also used on human beings to treat cancer, to kill cancer cells. Till here it is clear?
Yes, sir.
Yeah. Now, in India, okay, at different, so when we also see at a different frequency, we have, when we hear the radio, we change the frequency. So, at a different frequency, there is a different channel, yes or no?
Yes, sir.
So all these radio companies, they have to buy that particular frequency from the government, okay, and then they have to pay for that frequency just like you pay rent. Now let me explain the entire India. Now why am I explaining all this? Because in your law they have given you direct all these words and they are starting to use all these words. So till you don't understand the very basics, you will not be able to understand the law behind it, okay. So first, entire India has been divided into various blocks, has been divided into various circles and blocks, where every block is auctioned. Every block is auctioned, and in that auction there will be Airtel fighting, there will be Vodafone fighting, there will be Jio fighting, there will be Adani network which has now come in, will also be fighting for that circle rights. So with that rights, they can give a business. Anyone else wants to give business here, if I have been allotted, then they have to take my service where they have to pay me certain amount. Till here it is clear?
Yes, sir.
Now till now we were all absolutely fine where we were seeing 4G. Now there is a 5G that is coming. In China 5G is already started. In South Korea 5G is already started. In India now we have made the bids in 2022. Okay, and 5G network, who has got the maximum bids of megahertz, how many bids, top bidders they are there for that many megahertz they have got, that many areas and zones, that is Jio was the top bidder. Second came Airtel, okay, and Jio had acted very aggressively and became the top bidder, and he bought in spectrum licenses. He bought all these rights, telecom rights worth 88,000 crores. So this is the 2022 Ministry of Telecom data, where they are showing that the maximum bids and the maximum spectrum rights, okay, maximum circles has been taken up by whom? First was by Reliance Jio. Second rights which have been got in certain areas are Bharti Airtel. Okay, so they have these many powers. Third bidder was Vodafone Idea, and fourth, Adani also has now started into the telecom industry, and they also have got rights. So there is Adani Network Limited, ADNL, okay, which they have also entered into the business of telecommunication now. And all of them, they are applying for unified license. When I say unified license, means what? They will be able to give radio, they have audio, they have voicemail. All these services are needed because you give on WhatsApp, you send audio, you send video, okay, then you have video calling. All these rights are needed nowadays, all under one head, called as unified licenses. So no separate license will be required for audio conferencing, voicemail, auto, text services, etc. if you're getting a unified license. Till here it is clear?
Yes.
So all these companies have got a unified license. Now this is the main law which they have picked up and copy pasted here. Okay, for us, we have to build a 5-mark answer in this they ask. So you can pick and choose which all points you want to build a 5-mark answer. Now we'll be starting with the law once you've understood the background. Here we are seeing the Department of Telecommunication coming under the Ministry of Communication. Till here it is clear?
Yes.
They have given you the M&A, Merger and Amalgamation Guidelines. First, which is the national policy of India for telecom, which we'll be reading? It is your National Telecom Policy 2012. Okay, has laid down one of the strategy for the telecommunication sector to put in place simplified M&A regime. So this policy has laid down a simplified M&A regime. Till here it is clear? In India, can you unmute and tell me that in telecom sector, how much percent FDI is allowed?
100%.
100%. If you go to see, Vodafone is not an Indian company. It is a UK company. And the Vodafone India is owned by, majority shares are by Vodafone Group, which is of UK, England based company. Clear? It can even own 100% shares of this company. Okay, it can be 100% subsidiary also. Now government has bought Vodafone because it was running into losses, but 100% this is also allowed. And it also allows for trading in spectrum. Spectrum means what? If I have got licenses, now I want to exit out or I want to give the licenses to someone else, I will trade those spectrum licenses. What are these spectrum? Those rights which I have got to do that, business, different kind of access services, telecommunication services, those rights I can give to someone else also. Clear till here? So trading of spectrum is allowed. And Companies Act 2013 and the amendments have been made in reference to compromise, arrangement and amalgamation. SEBI has also made a procedure for IPO. So very simple. They will have to follow the Companies Act also because these are all telecom companies at the end of the day. Here they have given you additional points. First, can you tell me a scheme of M&A in India under Companies Act 2013? Who is the authority who we approach to with the scheme?
NCLT.
Obviously, you go to NCLT, constituted. Also, there are multiple other acts. One of it is your Indian Telegraph Act 1885. Okay, under which you get different kind of licenses. So, the various licenses granted under Section 4 of the Indian Telegraph or Telecommunication Act 1885, to which the companies need to transfer their licenses to resultant entities. Again, Vodafone Idea, both have got licenses under Indian Telegraph Act. They have transferred their license to the resultant company Vodafone Idea. Concept clear?
Yes.
Yeah. Okay, from here you obviously don't have to go into so much technicality. You need to build an answer. Next, earlier they are saying that there were different kind of guidelines were issued for cellular mobile telephone services. Okay, or unified access services licenses. Okay, and the so I told you unified access services are there, like your mobile portability, your text, video calls, etc. Okay, now next, if we see the categories of telecom services licenses authorization under the unified license shall be permitted as per the guideline mentioned below for proper conduct of telegraph and telecommunication services. So again, few guidelines have been given under the unified licenses. Okay, for proper conduct of the telecommunication service. Till here it is clear.
Yes, sir.
Now, and very simple points, okay? You just need to understand. First, the licensor shall be notified for any proposal of compromise, arrangement, amalgamation of as filed before the NCLT or the company judge. Now, first thing is, who's the licensor here and who's the licensee? Let's take an example of Vodafone Idea only. Vodafone and Idea. Okay. So they are both the transferor company. Yes or no? They will transfer their business, they will transfer their licenses to a company called as VI, Vodafone Idea. Yes or no? And this will be the resultant company or the transferee company. Yes or no?
Yes, sir.
Very simple. Now, this will be the licensees who are getting the license. Am I right? Yes or no? They will be the licensee companies, no? They have got the license. Both of them are the licensees. Who will be the licensor? Who gives you license under Telecom Act? Can you unmute and tell? Government of India. Clear till here?
Yes, sir.
Yeah. So if I take you through the entire regulation, it actually comes in the name of the President of India. See, this is the license agreement which is there. Okay, unified license agreement. So this is a draft agreement that will be there under the Department of Telecommunication. Now see who is the licensor here. This is the licensee, will be the name of the company. And the licensor is whom? What they've given? The Department of Telecommunication, but between the President of India acting through whatever the Department of Telecommunication. So it's between President of India and, so now the President of India really doesn't sign, it's just for the sake of this that they're doing. Clear till here? So it comes under the FASTMILE signature, those signature of there, just representing the central government has approved. Clear till here?
Yes, sir.
Central government or the Department of Telecommunication. So they are the licensors. So the licensor shall be notified for any proposal of M&A that you're putting before the NCLT. A time period of 1 year will be allowed for transfer or merger of the various licenses in different service areas. Now again I told you there are different service areas where every service area is bidded and various companies bid for that area. If someone else wants to use that, then they have to give. Then if, for example, if I have got my license in this area, circle area, if my subscriber or my user is going outside the circle area into circle area of someone else, it automatically switches to that network. You don't come to know because the technology is such that you are using the technology, the platform, gateway, everything of another telecom provider, but I will have to give them rent. My company will have to give and take access from them. Clear till here? So these arrangements are there and they have all these background. I will tell you also what is that word, where we come to know how much is being used in some other place. Clear till here?
Yes, sir.
So they say that 1 year time has been given for transfer of all these licenses under the merger. If a licensee participates in auction and is consequently subject to a lock-in condition, very simple. Agar koi lock-in condition is there on the licensee and which is now the transferor, wouldn't it also apply on the transferee company?
Yes, sir.
All the licenses of the transferor will that become of the licensee. All the lock-ins of the licensor will become that of the licensee. So same here, then if the licensee proposes to merge into another license, see, then obviously the lock-in period would apply to the new shares which would be issued into the resultant company. Concept clear?
Yes.
Okay. Now again, the merger or licensee authorization shall be irrespective of the service category, as access service license or authorization allows provision for internet services. The merger ISP license will also be provided. Again, very simple. If I have got a internet service rights, if I merge with someone else, don't you think that rights will also be transferred?
Yes.
Yeah. So obviously the ISP, the internet service provider license, will also be permitted to be transferred to the new entity, resultant company. Again, similarly, they will go on to say the licensee of the transferor acquired company will be subsumed in the resultant company. All the assets, licenses, authorizations held by the transferor will now be held by the the resultant company. The validity of the spectrum which is there, okay, spectrum might be given for 20 years, so, or maybe 1 year, whatever it is there. So whatever validity is there, the remaining validity will be with the resultant company. So validity of the spectrum shall remain unchanged. So if it is valid only for 3 years now left for me, so it will be unchanged with the new company. For any additional services, do I have to take new authorizations or no? Yes. So obviously for new services today, if, because 5G is coming now, it's a new service, I will have to take a fresh authorization for that service. Okay. Now here they've just given you some point of 50%, very, very simple. They are saying that if in an area they have limited a service provider to maximum 50%, like how we have FDI, maximum limit can be this much. If they have limited that maximum in this area, you can be 50%. After merger, you have got combined rights and it has increased to more than 50%. What you will have to do?
Reduce it.
Reduce it. Perfect. So taking into consideration a sectoral cap of 50%. For example, we've said that in this area foreigners can come, but they can have maximum 50%. For example, okay, in a band for access service, transfer or merger of the license consequent. Now they have merged with someone else, and it shall be allowed to access of the resultant company is up to 50%. In case of amalgamation, the proposal results in the market share in any service exceeding 50, the resultant company shall reduce the market share to limit it to 50% within 1 year from the date of approval of the merger. Simple point. Yes or no? Okay. So here you have to remember that you have to build the answer, few points, and that is it. Okay. You can pick and choose whichever points you want. Now next they were saying is the adjusted gross revenue of the licensee. You can mark it as important, just the word itself usually is very important, because it was in the news where companies had to pay on basis of the adjusted gross revenue license. Now what is the adjusted gross revenue? Gross revenue, on that there are certain adjustments made, then that revenue which is called after adjustment is called as adjusted gross revenue. Clear till here?
Yes.
On basis of the adjusted gross revenue, they have to pay the license fees. So on basis of the adjusted gross revenue, the license fee is determined. Now they are saying while determining the gross revenue, we will while looking at the market share, we will see how much subscriber base you have. Okay, how much exchange data records you have, like from your network, how many people of India are there, how much data is exchanged, that all will be there. They will also have to determine that how much market share do you have. They will look at all these factors. Yes or no? Now, if you go to see this other part, even the VLR, what is a VLR? It's a visitor location register. So visitor location register is, remember I told you that every telecom company gets a certain circle in which they operate. Telecom company gets a certain circle within which they have to operate, yes or no?
Yes, sir.
If the user is going into another zone, automatically the service provider changes. For you, I'm not talking of your Vodafone will turn into Idea, etc. I'm saying that in the background technology, your service provider is now paying rent to someone else. And that's why when you travel abroad or you travel in another part, it gives you a message. Sometimes if your service provider doesn't have the service to give you beyond that, or they have not taken, you will face disruption in your network. Yeah, have you noticed that?
Yes, sir.
Yes. Same way if you go internationally, you travel to somewhere else, but sometimes companies might give you, if they all have the access and they have made this arrangement in the backend. So visitor location register also, I will come to know that how much strength do you have, is a server, a cellular network that supports roaming functions for the user outside the coverage area. Okay. Now, so all these records we will check how much exchange data is there to determine what. Why are we going to check how many visitor location register? That means your visitors have gone outside and how much support you've given. Second, what are the exchange data? How much data is being used on your network? Why do you do? To determine the market share of the company. Today we say that the biggest network market share is of Airtel. Second is of Vodafone, and very close competition between them. Second is between Jio. Some might say that Jio is there. To determine who is having the biggest market share, you will have to see the exchange data records and the visitor location records. Clear till here?
Yes, sir.
Now, a transferor holds a part of a spectrum. For example, there are various spectrum. They get certain ranges that they can utilize. Okay, some is for radio frequency, some is for audio, for video frequency, for transmitting all of that. Now, all of that gets covered in the unified license. But earlier they had these individual licenses also given. Now they're saying that if the transferor company holds a spectrum of whatever this spectrum range they have and has been assigned against the entry fee paid. Okay, they have been assigned, they have been given against the entry fee paid. The transferee company, that is the resultant company, shall have to pay the government the difference between the entry fee paid and the balance amount. Yes or no? For example, they say that you've entered into this, you have to pay some 20 crores. Out of that, 15 crores have been paid. Balance 5 crores, who will pay?
Resultant company.
Resultant company. Now, this was all before 2010, etc. Okay, where these individual things used to work. Now, spectrum usage charge shall also be payable on how much you have used. Okay, that's a separate charge that they take. The total spectrum held by the resultant company shall not exceed 25% of the spectrum assigned for access and 50% of the spectrum assigned in a given band by way of auction in the concerned area. Okay. Now this different rules they will give you, different limits they will give you, so that whatever limits are there, the telecom company will have to follow. So we can say that it should be within the limits. If as a result of the merger, the total spectrum held by the relevant entity is beyond the limits prescribed, excess spectrum must be surrendered within 1 year of the permission granted. Similarly, as we saw, all demands, if any, relating to the license will have to be cleared by either of the two licensee companies. Whatever demands are there, okay, telecom license demands, the charges, the fees by the government, whatever demands has been raised by the government, who will pay? Licensee will pay, yes or no? Now whether it is Vodafone or it is Idea, we don't care. Either of the two will decide who will have to pay, or both will decide that the resultant company will pay. Clear till here? Then comes government has made special rules for big players in the market, dominant players in the market. If the resultant company becomes a significant market power, they have given you certain in the telecom regulation, they have given various thresholds to determine who has a dominant position, a big position, a significant market power. Once you get a significant market power, then there are certain rules and additional disclosures that will be applicable to them. Clear till here? If the resultant company becomes a significant market power, then those rules will also be applicable to the resultant company. The dispute resolution shall lie with the Telecom Dispute Settlement and Appellate Authority. The licensor, that is the government, reserves the rights to modify these regulations in public interest. And that is it. We've covered the entire chapter. Thank you.